Welcome to America's Commercial Real Estate Show, your source for market intel, forecasts, and strategies. Hello, I'm Michael Bull. Thank you for being with us. This segment is brought to you by Commercial Agent Success Strategies. Check it out. It is the ultimate in training for commercial real estate brokers. The website is commercialagentsuccess.com. Well, today we're going to talk about the crazy 2021 that we've just had in deal flow, in investment sales volume all around the country. There was just tremendous amounts of volume. And where did the capital come from? Why did it happen? And what should we expect in 2022? Should we expect a drop off, more activity? A lot of things kind of impacting that, including the Fed's recent discussion about potentially raising rates to 3 times in 2022. Let's talk to an expert. Please welcome my guest is Tim Bodner. He's a partner with PwC. Tim, thank you for joining us, sir.
Thanks, Michael, for having us.
I appreciate it. And you guys just did a report, and we'll put a link to it, kind of the year-end deal update and a 2022 outlooks. And first of all, as what we have so far to finish up 2021, what kind of deal volume did you see?
Yeah, so what I think we would say, Michael, is that we were always of the view that we would see significant deal volume throughout 2021, but we always felt it was going to be back-end loaded. And that's really what we saw come through, particularly in the third quarter of 2021. It was broad-based across a number of different sectors. There was significant corporate level transactions, almost getting up to 2018 volumes, although still short of the record of what we saw in 2007. But very, very active market, and from what we're seeing in the pipeline, it seems like it's going to continue.
Yeah, and for my listeners that might not aware of the corporate volume, is that M&A, REIT-to-REIT sales? What are you talking about there?
Yeah, it's actually fascinating. So if you look at the peak M&A on the corporate side for volumes, we're about $54 billion of total activity right now on an annualized basis for 2021. That would be annualized to about $72 billion. If you compare that, that's almost back to 2018 levels, but still far short of the 90 plus billion in 2007. What's interesting, if you compare 2021 to those 2 years, this year it has much more public to public REIT activity than both 2018 and 2007, which was much more comprised of kind of public to private deal activity. We think that a lot of that has to do with kind of where pricing is across sectors.
Okay. And we're brokers at my shop in the Southeast, and we saw a tremendous increase in our investment sales volume in 2021. Why do you think we're seeing that, or have seen that in 2021?
Well, number one is if you look at the allocations of institutional investors to alternatives, with real estate being one of those alternatives, many institutional investors are under allocated. So we have seen overall allocations increase from institutional investors to real estate, which has created a significant amount of dry powder available for deployment across the real estate sector. So that's one reason. The second reason that we've seen, and this year we think we'll see about $30 billion of retail capital flows into new real estate products sponsored by institutional investors. That capital, has I guess a characteristic associated with of needing to be deployed quite quickly. And so with that much capital coming in that needs to be put out, there's a motivation by a lot of the sponsors of these products to put capital to work. Second, or I guess third is, look, capital in the finance markets were still readily available. When you listen to what some of the large financial institutions are saying, they're still saying that loan growth is going to accelerate. So it's a great time to be able to get deals to pencil, given the amount of financing that's out there in the markets. And then look, the interest rate environment's still quite low, even though we do think it's going to increase based on what the Fed said yesterday.
Yeah, and our show listeners around the country and viewers are range from institutional capital that are only looking at the kind of the largest transactions to the medium and small investors. And in our shop we deal with all sizes, and it seems like even from the largest investors to the smallest, there was a real surge in 2021 to do something while the 1031 exchange was on the pay for list, while there was talk of increased capital gains and other things. But it seemed like in our shop, once that 1031 exchange went off the pay for list, and this discussion lessened about increased capital gains, the phones quit, started sort of really slowing down, and we had a lot of sellers that said, "Hey, if we can close by December 31st, we're good. If we don't close by then, we're not closing." What do you expect for volume in 2022 from those types of sellers who maybe were squeezing in deals this year?
We certainly still think we're going to see deal activity that's associated with an uncertain legislative and regulatory environment. Michael, I think there's a number of different policy changes that are on the agenda that people are focused on. We certainly think it's going to be a bit lower than maybe it was believed to be before, just given kind of what you talk about. That it seems like some of the changes that the Congress was looking at doing, particularly with respect to 1031, the exchanges may not be on the table any longer. But as we all know, it's an uncertain process, so it's something that we're still watching.
And Tim, what about interest rate impact? And the Fed's talking about some increases in 2022. Might the deal volume impact be?
Yeah, look, even with the Fed's recent announcement yesterday, where they're going to double the pace of tapering, and with 2 to 3 rate hikes in 2022 and more in 2023, interest rates on a relative basis are still going to be low. So we think it's going to be something that will be taken into consideration, but we don't expect it to dramatically impact the flow of deals overall, particularly given the amount of growth that we're seeing across the markets. I think if you look at the public market returns as an example, the REITs kind of as a whole asset class were up 38% in 21 through the beginning of this month, and the pace with which the earnings of these businesses recovered. I think same store sales are up about 9%. So we think that their earnings growth will kind of enable deals to still pencil, even though rates may be marginally higher.
And Tim, the multifamily market and the industrial market, everyone knows, has just been red hot. And I guess we all expect that those will continue moving forward. But what about hotel sales volume, retail, and then maybe specifically office, which seems to be the most in question out there today? What do you guys expect in your outlook moving forward?
Yeah, so I think what's been fascinating is maybe I'll just take retail first. The performance I think in retail has been stronger than most people kind of expected. What we are seeing in terms of kind of leasing activity in the retail channel is significantly more activity than was originally contemplated. Certainly, a number of retailers have announced what some may view to be aggressive store reopening plans, for the reason that I think most retailers have kind of come to the conclusion that it's a hybrid model that's going to be the future of retail. So I think certainly retail has performed better than some, and we're seeing that in terms of kind of how investors are looking at deals. Some investors who told us, a year ago they weren't going to go back into retail are now going back into retail with a heavy focus on some of the grocery anchored um, centers. But even in the upscale mall space, when you look at the performance of some of the larger owners of upscale malls, their foot traffic and their sales are quite strong. So we do think we'll see more in retail, but it's going to be on a kind of selective basis. In the office market, I think as most observe, the gateway markets are still working through some stress, particularly the New York and San Francisco vacancy is still quite high. But I think the real story in the office market is it's a flight to quality with the newer the newer assets or the highly amenitized assets are certainly getting a significant amount of capital uh, placed in those areas, and then we're also seeing a lot of focus on flexible space, kind of across the board. I think if you look at some of the co-working operators, we're seeing a lot of kind of M&A activity in that space as well as just given some of the demand that's come back. So office is going to, from our perspective, is going to be a story about quality and flexibility. Um, and then I think as you look at kind of some of the other asset classes that you focus on, like lodging as an example, uh, the drive to and leisure related assets are performing quite strongly. We're seeing a lot of momentum around select service and uh, all inclusive type of assets that are play on kind of the leisure play. The business and the larger assets in the gateway cities, those are still somewhat behind. And what we're seeing from some of the surveys that the firm and other market participants are doing, it seems like there's going to be about a 19% drop off in business demand, and which is going to have a kind of a pretty substantive impact on those assets. So we think lodging is a story about leisure for at least the next year to 18 months.
And Tim, where do you think there could be some opportunities in 2022 for investors?
Look, I think if you look at what's happening around the continued digitization of business models, the amount of capital that's going into companies moving things to the cloud still shows tremendous potential in sectors like around data centers and towers. The volumes that's expected from in leasing activity in towers, an example from just the 5G employment is 5G deployment is actually quite substantive. So we like the sectors that are associated with digital infrastructure, those being two. Another area of significant opportunity that we see is around single family residential. I think it's no secret that that investors still comprise on the institutional side is a very small percentage of kind of the overall available single family residential housing stock, and there's just incredible tailwinds with strong cash flow growth. So we like single family residential. You mentioned multifamily. We like a multifamily as well. And then finally, the areas in and around what's happening in life sciences. Look, the amount of capital that's going into development of new therapeutics is significant, and there needs to be real estate available to support that. And so we like the life science environment as well, Michael.
Okay. And Tim, as you guys looked at your year-end deal update and your 2022 outlook, um, what in the report and outlook might surprise some of our listeners and viewers?
Yeah, I think it's a really interesting question. I think what might surprise some is um, I think kind of our continued bullishness on the overall level of activity, even though 2021 was almost at record levels. We think actually 2022 could end up surpassing uh, not only 2021 and 2018, possibly 2007. And one of the big reasons for that is the amount of capital that we're seeing move into real estate from retail investors. That trend is a very very powerful trend. It's being seen widely across market participants. If you listen to kind of some of the recent earnings releases from some of the public companies, the growth in wealth management is on the top of everyone's list. And so we think that the amount of activity that's going to be associated with retail capital flows is going to surprise people.
Wow, and I hope you're right. I am hoping you're right. We got to end the show on that because that's good news. Let's just stay positive about that, Tim. Sir, thank you for joining us.
Okay, thanks always for having us, Michael.
All
Have a
right,
good day.
thank you. And we'll have a link to the report on our website. It's creshow.com. Just look for the PwC year-end deal update and 2022 outlook at creshow.com. Hey, thank you for joining us, and Happy New Year to everyone. I hope you have a fantastic 2022. And until next week, when I hope you'll join us again, make sure you always lead, learn, and laugh, and join us for America's Commercial Real Estate Show. America's Commercial Real Estate Show is brought to you by Buxton. Take leasing, site selection, and due diligence to the next level. Make the right decisions with on-demand mobile data. Visit buxtonco.com. By Bull Realty. For proven commercial real estate asset and occupancy solutions, contact me. My email is michael@bullrealty.com. By Commercial Agent Success. Expert-level commercial real estate broker training. Cloud Access 1, up to 21 one-hour videos. Visit commercialagentsuccess.com. Thank you for reviewing, subscribing, and sharing America's Commercial Real Estate Show.